Hello and welcome to Property Information Evening. My name is Salesh Chen. I'm a chartered accountant in public practice, and today we'll be talking for about 1.5 to 2 hours, depending on the feedback we get from you guys. Format of the day, it's pretty casual, so feel free to ask questions. And we'll run examples on our property investing strategies and the kind of stuff that we do with our investments. So we're very active investors. So I'll give you examples of what we do, and our friends will give you examples of that as well. And hopefully we can make the next 1.5, 2 hours exciting for you. Um, so as mentioned, I'm a chartered accountant in public practice. I'm also an active property investor. I invest in properties such as buy and hold. So these are rental properties. I do cash flow investing. So where you buy properties and it's cash flow positive. And I do land banking assets as well. So these are properties with big sections um, that you can build on later, or you can demolish the front house and you can build a number of houses, which we'll show you examples of. I also invest in trading activities. This is where we buy, do up, and sell houses. So this is something that we do a lot. And another thing that I've started doing over the last year is building brand new houses and selling them on the market. So we've started that, and we'll show you examples of this later in the presentation. I'm a partner here at GRA. So I've been a partner since 2012. I have 16 years of experience in accounting and property investing. Currently, in our whole portfolio, we have over 50 properties in our whole portfolio, and majority of this hold assets are generating cash flow positive, and the cash flow positive and land banking assets. So if I subdivided these properties, we'll have circa 300 sections to build on. So this is the advantage of investing in properties with big sections, And I'll show you examples of how I started and what I did with my investment portfolio later. So before I move any further, I just want to make it clear that anyone listening to this presentation understands that I'm a chartered accountant. I'm not a FMA. I'm not giving any financial advice, and I won't be talking about any of the financial products on the market. So just want to make that clear. Now I'll give you about 10 seconds to read that. And if you have any questions regarding this, please email us. So a little bit of background about GRA and what we do. So we are a specialist accounting firm, and one of the things we specialize in is property accounting and business accounting. But we do a lot of promotion, or we do a lot of accounting for mum and dad investors and for business owners who run businesses and invest their money into properties as well. We also do asset protection. So asset protection is basically where we protect our client's business, their family home, and make sure creditors cannot put their hands into the client's assets. And that's one of our core goals to achieve. So family home goes into a trust, the business might go into investment trust, and all of that. We also do insolvency work. So basically, if you owe money to creditors, we get together and we help and negotiate, and we make sure we get an outcome. So it's a win-win situation for both parties. If you've got ID audit problems, or if you've got ID insolvency issues, we help you with that as well. We also do tax advice and tax planning. So basically, this is where we review your structures and we look at ways of minimizing your tax if we can, and we give you recommendations on how to do that. We also incorporate trust, and we are professional trustee in trust. So professional trustees, basically, you could have a young mum and dad investor with a couple of kids, and they want someone to look after the trust if something happens to them. So we are professional trustees. Or you basically have a single parent who needs a professional trustee, so we provide that services as well. And one of the biggest services we provide is our property school, which is property investment and education. So basically, property school is a course where we take you through from basic property investing knowledge to in-depth. It's a 21-hour course, and we have that, so that's called property school. If you know what you're doing in property school, we recommend you to do property development school. This is where you learn how to buy a site, develop, and on-sell for profit. So this is some of our educations we provide. And today we're doing property information evening. So this is basically to give you a rundown of what happens when you invest in properties and how far can you get in your life. So we represent and we work with a lot of families around the country who are very successful with property investing. If you want to get ahead in your life, I'll tell you this now, you do property investing properly for the next 10 years, it sets you up for life. If you do want free resources or you want to follow GRA or you'd like to get free blogs, seminar recordings, all of that, please click onto one of these links and sign up. And you'll also see the prior seminars that we've done that you can look into. We like to share our knowledge. A lot of people ask me, why do you share a lot of this knowledge? Why do you give it away? We want our clients to be successful. We want any new clients coming on board to be successful. So we like to share our knowledge. We don't hide anything. We're pretty straight up and we tell you how things are. So yeah, if you'd like to sign up for one of those, that would be good. Today I've got two of my good friends presenting with me, Maggie and Than, and they are very smart property investors. I use Maggie and Than on a daily basis to talk about properties and investment strategies and getting some ideas, so they are both very smart. And they have really amazing stories to tell you from where they started and how they've ended up with their portfolio. Basically, in summary, what we're trying to tell you is if you invest properly, within 7 to 10 years, you can create a portfolio that can retire on. And Maggie Than and I will show you how we've achieved this. Now, I'm just going to talk a little bit about property and where the property market is at the moment. So this is basically comparing the last 12 months. So, August 2023 compared against August 2022. So in some of the areas, property prices are down, 8%, 5% and all of that. You can see there Auckland's down 8%, Waikato is down 5%, and Bev Plenty is down 14%. What these numbers don't talk about is the rental. The rent is up quite a bit. The rent is up in some places nearly 30 or 40%, and rent will continue going up. Now, if you look at Auckland, you've got an 8.2%, decrease in price. A lot of people go, wow, that's a massive reduction in price. And I said to people, well, Auckland property prices went up 40% in 4 years. So if it goes back 8%, it's nothing, and another thing that I'm watching that's happening throughout the world at the moment is this major crisis of housing. As a shortage of rental properties in NZ, in Aussie, in Fiji, in the islands, anywhere in the world. When you talk to people, they all talk about how there's not enough houses. So housing crisis is becoming a worldwide problem, and this is what's happening. So one of the places they want to talk about is Gisborne. This is quite an interesting place. It's gone up 15% in the last 12 months. Actually, their rent is higher than Auckland now. A 4-bedroom house in Gisborne rents for about 800 to 900 per week. So the rent out of Auckland in the regions are really high. Rotorua, Bay of Plenty. We own quite a bit of properties there, and now we are renting a 3 or 4-bedroom house between $600 to $800 per week. That's what we rent them at. A 1-bedroom house in Rotorua, 1-bedroom flat, rents for about $500 per week, and we've got plenty of tenants lined up to rent these houses. So this is what's happening across in the small towns. So the rents are up, and in some cases the rents are higher than Auckland. So don't be too nervous when you see prices come down. It's actually a good time to buy if you can get a good bargain. What are some of the things we're seeing out there in the market? We're seeing discounted properties are available. They're not easy to get. You've got to have the right agent on your site. You've got to negotiate well, and sometimes it means a month of negotiating, but you can get properties discounted. But sometimes I say to my clients or buyers, don't be too hard. If you're getting a good deal, what's 30, 40 grand, you can recover that money well if you're buying the properties at the right price now. So there's still great buying opportunities at the moment, but I think I have a strong feeling there'll be a change of government. And when that happens, I see property prices going up. I see more people moving into the country, and the demand will go to the next level. Well, I think we've just passed the bottom of the market. I think we're on the way up now. So we're coming out of the bottom. The property prices are going up. So if you are sitting there thinking, oh, I'm going to wait for a massive bargain to come, well, it's not going to come to you. You have to go and chase it. And if you don't chase it now, I don't know when you will, because property prices are going to go up now. Interest rates are stabilizing. That's the biggest thing you got to remember. Interest rates are going to stabilize 6 to 7%. And they're saying, I've been listening to a lot of economists, they're saying interest rates are going to come down next year. And when that happens, it's a different ball game, prices are going to go up. But I have a strong feeling prices are going to go up anyway. What I've noticed in the market, the cost of building houses has gone up. The cost of land is stabilizing. So to build a new house, it's not cheap. It's expensive to build a new house, right? So I think if anyone was going to build new houses, they'll want bigger prices. So that will push the price of existing stock up. One of the other things we've noticed in the market, there's strong tenant demand. So I've had a friend where a two-bedroom unit in Flatbush he owns came up available, came for rent, and he rang me and said, "Oh well, now I have to find another tenant." First day advertised, he had 6,000 hits. He had 300 applications within 24 hours for that particular property. So that's how bad housing crises are in Auckland. And there's massive demand for social housing as well. So as investors sell their stock, all these people need social housing, and there's just massive demand for social housing. I'm getting calls every day from social housing providers seeing if I can buy more stocks. Interest rates, like I said, are stable now, and I think it's going to stabilize. So, try and negotiate a good rate with your banks. They're always good at negotiating. And what I'm noticing is banks are actually lending more freely. I think money supply will come back on, and when money supply comes back on, property prices are automatically going to go up. So if you are an investor, you're looking at buying more properties, this is your time to buy. If you are thinking of getting into investment properties, this is your time to get in. It will never get any easier. Now is the time to get in. If money becomes freely available or more easily available, then you've got a problem because house prices go through the roof, and money will come back on. Money supply will come back on. I've noticed when 2007, 8, and 9 we had the recession in around the country. I've seen the Auckland property market. It only goes flat, very small drop for 2 years, and then the prices go up. And one of the reasons is as population increase, people want to come and live in NZ. They like this place, and also as part of the government contracts, they take 1,500 refugees a year, 1,500 families. That's automatically you need 1,500 houses on the market. So I think if you are an investor or you want to be an investor, you need to get into the market quick. One of the other things we're seeing in relation to housing demand is huge shortage of rental properties in Auckland. And one of the reasons, well, two main reasons is flood. We had that massive flood that's destroyed quite a bit of homes in Auckland. And then we got immigration. So we got this massive amount of people moving into the country, and they need rental properties. They're happy to pay for it, and they need it. Some of the things that I'm talking to about property managers, that when they do viewing, they actually put a time and say the viewing is between 1 to 2 o'clock on a Friday afternoon. They say there's about 60 or 70 families show up looking at houses. In some cases, the numbers are bigger. Our weekly rents are increasing as well. So every time a tenant moves, landlords are putting rent up by 10 to 20 or 30%. Now, if there's other landlords listening there, I've been saying this over the last few months. As a landlord, you need to put your rent up because you've got interest non-deductibility. You've got your rates are going to go up, which they're talking about 30% increase in rates. Your insurances are going to go up, right? You've got massive increase in costs coming in. So it's really, really important that you as a landlord, you need to put your rent up to recoup your cost, right? Don't be that guy that thinks, no, everything will be fine, because when it comes to end of year, you'd be surprised when the accountants produce the numbers and go, hey, you've lost some money because your cost went up, your inflation went up. So it's very important that you put your rent up. And also the other problems we are seeing in the market is shortage in the regions, especially where the cyclones were. So you got Gisborne, major shortages for housing, and you've got Rotorua, major shortage of housing in those areas. Hamilton has major shortage of housing. I've got a lot of providers chasing me, social housing providers wanting to rent houses in Rotorua. Tauranga has a massive shortage of housing. So this is all building up. It's all building up again. We're going to see a massive, massive shortage of rental properties and a very increased or large amount of rent increase, because the cost of providing rental properties is going to go up. So landlords will naturally put the rent up. Again, workers coming in. We got migrant workers coming in. They need houses because they want to bring their family here. They want the kids to go to local schools, so there will be massive demand on that. And at the moment, demand versus supply is in favor of investors. So if you're a property investor and you've got rental properties, well, it's basically gold at the moment, because you can really push your rent up and still get a tenant. Properties will not stay vacant. People have to pay a rent. People have no choice. I'm just going to jump on insurance and talk about a little bit about insurance. So, I work with a lot of property investors, and some of those guys have been investing for the last 20 or 30 years, and some of them have been investing for the last 10 years. Now, what I've been telling, and if you look at my presentations from the last 2 years, please look at your property insurance you have, because if you bought the property for 450,000 10 years ago, and you've insured it for 450,000, something happens to your property, and touch wood, nothing happens to it. But if something happens, you're only covered for 450, but your property is worth 8 or 900 or $1 million. So the insurance is going to write you a check and say, see you later, right? But the cost to replace the house could be 800-900 grand. So please look at your insurance, update your numbers so you're insured properly. Really, really important. I've seen it happen in Auckland. People have lost their homes and they have insurance for 300 grand. So very important, you insure your property as a replacement value, right? So if it's going to cost 800 grand to fix your property or rebuild your house, we insure it for 800 for $1 million or $4 million. Also, we got personal insurances. Now, a lot of people go to me, we don't need personal insurances, we don't care about personal insurance. Well, let me tell you, you do need personal insurance because the healthcare at the moment is maxed out. So you need personal health insurance so you get the right health care, and if you need it, right? And you need it on your family as well. So I suggest if you are looking at personal insurance, you get in touch with riskdirect.co.nz. Now that's one of the firms that we use a lot, but a guy by the name of Steve Monroe. He's quite helpful. He's happy to review your insurances and tell you if they're correct or not correct. He's a FMA, so he can give you advice on that. And then obviously look at health insurance, life insurance, and all of that. I personally think health insurance is more important than life insurance, but life insurance is important as well if you've got family, if you've got a family with young kids. Life insurance is equally as important. So, but health insurance is important because of the issues we're having with health providers. They're overloaded with work, they can't see you on time and things like that. So please look at your insurance on your properties, make sure you got the right amount of cover, and look at your personal insurance as well. And if you need any of this help, with properties, you can go to Initia. That's a company that we promote at GRA. They got good rates, and you got Risk Direct if you need personal health insurance, or you need to look at things like that. So why property? Why are we sitting here, and why do we talk about properties? So I reckon the reason people invest in properties is because they want to retire. They want to plan their retirements. They don't want to go to work. They don't want to rely on their weekly salary or wages. So the question is, are you ready for retirement? How much do you need? What do you need to retire? Like, that's one of the questions we ask. This basically means, how much assets in terms of cash and investments do you need to retire? So, for example, if you've got normal mum and dad with 2 kids in Auckland, you probably need a $2 million home. You need, $100,000 worth of cars. You need $1 million batch, and maybe other little bits and pieces, some cash savings, so maybe $4 or $5 million to retire in Auckland. All right. And if you're out of Auckland, the numbers won't be any different, right? Because you pay for the same amount for the car in Auckland or out of Auckland, right? So those are some things that we want you to think about. How long before you retire? So, you could be someone like me, 39 years old. So, you go, well, I've got next 15 years of working life left or 20 years of working life left. So I'll retire at 60. Or you could be a young lad, you're in your 20s now. In 10 years' time, you'd like to retire. So you look at that as well. And then we say, what assets do you have? So most of you could probably have enough assets. You need to just rejuggle them, sell something, or sell assets that are not performing, or look at some good performing assets and buy them. If you're a young person, you look at, okay, what assets do you have? Can you borrow some deposit from your parents, buy a property, And what debt do you have as well? That's another question we ask, If your debt is too high, we tell you to work and pay off your debt. Or the other thing you can do is sell stuff down and pay off your debt if your debt is too high, so you can reset your investment rules again. And do you have enough, So again, the question is, maybe you've got enough assets. You don't need to do anything much, just make little changes, and things like that. So this is some of the things we make you think. This is why retirement and property go well together, because they're related. If you invest in properties correctly, you can retire. So, and some of the things that I talk to clients about, or some of the young people, is they go, but we've got KiwiSaver, right? We don't think KiwiSaver is enough. And if you look at someone, say you're 25 years old now, you earn $100,000 a year, you have 40 years of saving, to do, and you'll get 447K at the age of 65. That's $360 weekly income. Can you live on that? The answer is no. You can't live on that, because anyone that lives in NZ, they know the expenses are through the roof. You go and do shopping, it's $400 for a trolley. So let's say you're 25 years old, you're employed, your salary is $100,000 a year, and your employee contributions is 3%. Your employer contribution is 3%. Now, if you are an employee, I think you should sign up for KiwiSaver. Like, remember, I'm not a financial advisor. I think because you put 3%, your employer puts 3%, it's 100% return on your money. So I think you should sign up for this. But you save 447 grand, so it's not enough. Here's another example. So you're 45 years old when you start saving. You have 20 years to save. Your target is $2 million. You need to save 100K a year, and that means you need to earn 250 grand. Now, if you earn 250 grand, you pay a PAYE of 74,000. You pay 76,000 in living expenses. You get 100K savings. Now, I can tell you, I know a lot of people earning 250,000 a year, and they spend 250,000 a year. It's just human nature. As you earn more money, you spend more money. This is what happens, So human nature is this. So very important that you need to understand. As you earn more money, you're going to save it. So it's hard. And if you're good at saving, you might save for the first 2 years. You go, I've got 200 grand in the bank account. Then you'll go, I work hard. I'm going to use 50 grand on holiday. So as you build up more cash, you can tend to spend them as well. I've seen this happen in my client base all the time. So the solution is long-term property investing. If it's done well, if you invest in properties well, you get ahead in your life. So you're not chasing your own tail. You earn passive income from property investing, right? On top of your normal working income, you earn passive income, right? You create wealth. So you create wealth that you can pass down to your kids and your grandkids, intergenerational wealth. And you can retire successfully and happily, securely and happily, You don't need to worry. So if you have 10 properties and you retired and things became a bit tight, you could sell one. That's the beauty of owning properties. And it's a change in lifestyle, If you do it properly, it changes your lifestyle. It gives you a lot of options in your life that you've never had before, So you look at property investors from 10 years ago, if they bought 10 houses, which a lot of my clients did, if they bought 10 houses 10 years ago, right, now they've really tripled their money. So if they bought $3 million of houses, they're worth 10 million now. So it's just every 10 years your houses double or triple in value. And that's coming as well. As the population grows, as more people move into Auckland, the demand for housing will go through the roof. And it's already happening. So if you do property investment correctly as well, you actually make really, really good money out of this. So some of the things you can do is buying for less than real market value. This is one of my strategies. I try and buy it for less than market value, and then I'll try and do up and add some value to it, so the market value is higher than what I've paid for it, and I create instant equity. Another thing that we promote is, if you are looking at getting into property, you think long term. So you need to keep your property for long term to get your capital gain. And you'll rent your property or lease your property for rental income. So that's your passive income we talk about, right? So that's your passive income. Rental or leasing income is what we consider passive. Improvements, repairs, and renovation, and building and on selling them for profit, that's what we refer to as active income. Now, passive or active. Passive is basically you've gone out, you've invested properly, and you get regular income every week. Active is where you're developing properties to sell, or you're buying houses to do up and sell. So if you accumulate the right amount of properties at the right price, right, you create equity and passive income. When you have enough properties, you don't need to work. Now, what we're saying is, don't throw your job and retire. You can cut back your hours, you can still have a job, so you know you can just stay normal, and keep yourself busy and have a structured life. Um, if you do property investing correctly, within 7 to 10 years, you'll have enough property that you can retire on. So that's how, like 7 to 10 years, if you do it properly and you buy the right properties. Property is about long-term investing. It creates significant amount of wealth. So that's what property is about. So you got to think about long-term investing, 7+ years, and it creates intergenerational wealth. As I said it earlier, you can pass down funds to your kids and to grandkids and all of that. Now, I'd like to show you an example of basically passive income, and this is passive in land banking. So here's a property we bought about 3-4 years ago. We paid 707,000. So you get a front house and a rear house. We spent 40,000 on renovating and doing a subdivision. So our total cost was 749,000. Back then, 3-4 years ago, our market value came back at 1.1. So we had instant equity of $351,000, which is 32%. What we did with that money, we refinanced, took our equity out, and we bought more properties with that equity. So what I'm trying to say to you, we basically got into the whole project without putting a dollar in, right? You put your money in at the start, you do whatever work you need to refinance and get your money out. So the property is rented at $1,100 a week. We get $57,000 rent at the moment, and our outgoings are insurance, rates, and repairs and maintenance, which is $7,500 a year. Our net yield is $50,000, and because we fixed some of this interest at 2.5%, so we are 70% geared at $13,000 or 80% at $18,000, but 100% at 18,000. So we are 70% geared. So we're getting $37,000 passive income. Now, because we fixed the interest rate for 5 years, all this money we're getting, this 37,000, we're putting it back in and paying off our debt as fast as we can, right? So that's what the game plan here is, to pay off the debt as fast as we can. That's what we're doing. So here's an example of two properties, back and in the back and in the front, and also a 700-meter squared land. We can subdivide and build more houses on this land. So not only we got cash flow investing going on here, and we got a big piece of land as well. So that's what we talk about: cash flow investing, land banking. This is a perfect example of that. And I'll show you more example as well. Active investing is basically where you renovate worn out properties and you sell it for profit. That's what we refer to flipping or trading. But that's what active investment is about, because you rely on your trading income. You fix houses with issues like such as unconsidered works. You reclad the leaky houses. So some of the things we do is reclad leaky houses, and we sell them once it's completed, and we rebuild rundown houses and build new ones. Now we're going to show you examples of this and with numbers as well. And profits from our active investment normally goes into either paying off debt on our hold, or we use the profit, reinvest, and buy more trading stock. So Than's joining us now. Than is one of the property coaches. So he's a really clever guy. He understands property investing and all of that. And guys, while he's talking, feel free to abuse him as much as you want. He's knowledgeable guy. So make sure we have lots of questions coming in. Than, do you want to take over?
Thank you, Celeste. Thank you. Good evening, all. Just a bit of a background of what I do here at the office. So I'm Than Sundar. I'm an active investor. Been in the office. Now I look after clients that wanting to invest. Come to me and say, "Look, Than, here's where I am. There's my statement of position, what I own, or this is here's my starting point. But what I like to achieve through property is in gold in the next 7 to 10 years. This is what I like to achieve, and what we do is we sit down and go through the journey of what can you do, what should be the way so that you can achieve your financial goals through property, and the steps that necessary needed to do so. And that's what I do myself. Salesh and Maggie, that you will present later. I know we look at the long-term plans of what we're doing. The other thing is like clients will come up to me and ask for advice, and I want to get the most out of my property, and how can I do to maximize my rental income? So these are different assessments that we could help you with. Also, clients that are looking to purchase properties would want one in a assistance in assessing market value. What is a fair price to pay? I mean, obviously, it's subjective to what you're trying to achieve in the long term, but and for different strategies. So a bit of a background of what I do, but I would like to share with you, most importantly, my story of how I got into property and what that involved me to achieve. And hopefully that will then, inspire someone else to, take the step forward or put some plan into action so that they could, benefit from this. I started property, my property journey started by what we call trading. Even before buying my first home, I went and bought property to renovate, to sell, to make money. But that started because of attending a webinar seminar like this, which people were showing what they were achieved through property, got me excited, and then obviously the skill set and the knowledge that I don't have to achieve or in order to do that. So got into education and upskilling myself so that I can go ahead and do this for myself. But before I do that, I'd like to share, what active or trading, flipping properties numbers looks like and what we've achieved in past trades that we've done. Here's an example of a property that you see. That's the before photo. Was a large home with a 2-bedroom, which dated, as you can see, it had original wallpapers, colors, decor around it. The kitchen have seen better days. And what we've done is bought it at auction, doing our numbers, and then renovated the property inside and out fully. So transformed this home so that a home buyer could come through and fall in love with it, and initially, pay the dollar that is required to move in and enjoy that home. So as you can see, that's the transformation. So a new kitchen, new bathroom, new paint, new carpet, the whole works done to the property. And most importantly is the numbers of how it looks like. So we bought this property for just over 824, so 8,824,500. The renovation cost to transform that house was just under 100,000. The 8 marketing fees that you see in the future presentation refers to the agent fees. The lawyers, settlement costs, and interest rates are all up for us, including the purchase price. It was 975,616. Put it on the open market, sold it at auction for 1.170, and that was giving us a profit of 190,000 before tax and GST. Taking GST component out, we made a profit of 167,000 in the space of how long did that took us? 4 months. So that's from buying, selling the property, renovating, and then selling it back again and getting the money in our bank. So that was an example of a trade that we've done in Goodwood Heights in Auckland. The other property here you see in front of you is what we bought was a home and income. So these 2 properties were under one title. The front, you have a 4-bedroom house, and the rear, you had a 3-bedroom house. We did our due diligence, and what we've done in this instance is gone and subdivided the property to 2 lots. So the front is its own separate title and we sold separately, and the rear then its own separate title, sold separately. So we didn't do any work. It's a small minor renovation to the properties, but all the main work was separating it into its own title. So purchase price was 1.370. The renovation and subdivision cost was 50,000. We sold one of those property privately, the other one through an agent, hence the reason why we got the 1% marketing fee. And then this took us 6 months. So all up, it cost us 1.495, so just under 1.5. And we sold both of them combined for 1.810. So a profit of 314,000 before tax and GST. Taking GST out, that's 267,000 in 6 months. So these are the skill sets and the knowledge that I previously didn't have in order to do this, and I could see others were doing it. So I was like, okay, I need to know the secret to this. I know how to make it work and have the confidence to do that. So that's where I got into before starting all my journey, getting into education. So a bit of an overview. I was working full time as a sales rep in the freight industry, and back then for me it was like, okay, that is my career. I'm going to move up the sales channel, go into management. But then things got me thinking, okay, what else do I have to fall back if something was to happen? literally there was nothing coming up. I mean, I didn't own a home. There was just, a work, and I was saving money, but I needed to do something for myself that, where if I was to put 20 hours of something into me, I had the reward versus working for someone else. Yes, I was getting paid grateful for that, but if that was not there, what are my other options? So I luckily have 650K of saving, 130K from my parents that was have access to a revolving credit facility, which was taught to me how to obtain that, and through the seminars and education, and then went in and did my first deal. And first deal was the real eye opener, because I mean, all that theory, listening to people talking about how much they made, that's so great and fantastic. But until you do it yourself and have that money in your bank account, that's the real, like, woohoo moment for me, in the sense that, I did it. Yes, I can also do it, and it can be done. So that made me more hungry and able to wanting to do better. So I went out there, and while working full time, I set a goal of one property trade for a quarter, and the next year I did 4 deals, and then 2017 resigned from that job, and got into more seriously into looking at trading property. So if you were to look at my, the view of the journey of what property has allowed for me to do is, my number of deals has increased, my confidence has gone, when I'm looking at deals, the knowledge, it's just got better and better. And then also using the money to buy myself a home and rental property for, for future passive income, because, we're all doing this for the long term, and you want to have those passive income coming through, every week from rental. So, and that's the goal. So if you were to look at, the snapshot, from 4 deals, 2017 7, and it continues. 2016 also bought my first home and income, which I'll show you later. And then along the line, I bought another rental income, which is my neighboring property, and then bought another property, which is now my home. Ideally, it was actually meant to be a trade, but then it was too nice of a house, and I wanted to hang on to it, and bought another property in South Auckland. And then I got involved with looking after clients back in 2020. Ooh, that went fast. And yeah, and then ever since, helping clients and also being active on the market. So looking at my long-term properties and my holds that what I'm holding on to for the future. Number one was the first property that I bought as a home and income. What I did is just renovated the front property, and rented the rear property out. And while living there, sweet talked the neighbor, and said, look, when it comes for you to sell, if you are willing to sell, before you take it to market, please come and have a chat to me. And if I'm in a position to buy it and we can agree on a price, we can make it work. And I think about 2-3 years later, yeah, she came around knocking on the door, and that transaction went ahead. Now I'm keeping an eye on the rare property for me, because it gives me a better opportunity, which I'll show you later, as to what I can do with the piece of land if I was to achieve the back property. Number 3 was the other property in South Auckland, which is a rental, but also has long-term plans for development opportunities, which I'm just sitting on it and getting the money and just paying down debt. And the front on the property that you see on the top, which was the home now, which we originally bought to thinking that we want to renovate to sell, but then we have held on to it. And I'll show you the numbers on that one as to why I didn't choose to sell that property and what that property has given. So property number 1 that you see here, that I showed you earlier, that I first bought, this is what I could do right now. They're demolish it, build 6 townhouses, and that's the future goal later down the track. But in the meantime, I'm just getting the cash flow coming from the front of the rear property. The similar things will apply to number 3 that you saw, where I could build 3 houses there. The home, so that was purchased for 965. Spent about 185K in renovation. The current CV is about 1.65. Current market value is probably 1.4. So I got 250K worth of equity gain. And in the peak of the market, I would have probably easily be able to sell it for 1.6 for what the CV was. So I'm just sitting on it, and having that equity that I could recycle for other projects, other deals, other opportunities that I come across. So that's the thing about property is that having the confidence, knowing your numbers, and understanding the process so that you can work it through and just go through the logic and take action on it. And so, that's my journey through property. And if you guys have any questions, please do ask, and I shall, or later on, answer any questions you guys have. And I'll like to introduce Maggie to share her journey as to what properties has done for her.
Thank you, Than. Hi, everyone. I work with Salesh and Than at GRA. So I do a few different things at GRA, including helping clients with their investing, looking at properties they're interested in purchasing, helping with due diligence, helping with projects, development projects, looking after a lot of Matthew's projects for him, who's a managing director, and generally having fun and putting up with being teased by Salesh and Than. Similar to Than, I started off by attending GRA's property school. Learned that how important it is to put the right advisors in place from the beginning and to follow a really solid plan, learning to invest correctly right from the beginning, which might seem slow because you need to invest a bit of time in understanding what you're doing before you rush out and buy something, but actually saves a lot of time in comparison to buying a property that turns out not to be a very good purchase, and then you could be stuck for a few years before you can either sell it or wait for the equity to build up and before you can get started properly. So it definitely is worth the time. With a JV partner, we adopted more of a passive investing strategy, so investing in rental properties right from the start, and we're able to secure a $300,000 revolving facility to get going, secured against a house based on income. So I went hard at the beginning and bought 4 properties within 8 months in 2015. These are all in South Auckland. First one's a little granny flat. Wouldn't have bought it other than it came in a package with some others that we wanted, and it was quite cheap. That was renting at $285 a week. Then also a house in granny flat and a house in a consented sleep out. So correctly consented, it was sleep out was built as such as part of that garage right from the beginning under building consent. And in August followed up with another house in sleep out, which looks like that's number 4. It looks like a little granny flat, but in fact it was only consented as a sleep out, and that explains why the rent was so low at the time on that. The previous owner was renting that sleep out illegally as a separate dwelling, even though it wasn't correctly consented, and we took that on vacant at the time of purchase. Over a 25-year period, using an average rate of 5%, which is pretty much what paying it fluctuates. Different properties are purchased at different times and interest rates may vary a little, but on average, I seem to have been paying around 5% thus far. So total cost there was purchase price and including some funds that were spent on renovations or repairs. So just applying for this purpose, a 5% interest rate across that. That's our loan payments on principal and interest, the amount of rent the properties bring in now, and our costs. We do our own management, so those costs are predominantly insurance and rates, because we're able to do a lot of our repairs and maintenance as well. So the base costs, obviously some fluctuations depending what goes wrong, but most of those properties are producing a surplus on using P&I lending so that the tenants actually pay that debt off, apart from the last one, which we subsequently sold. So the original revolving credit facility has been repaid by these houses, not using our own money, but being able to draw funds out of that portfolio to repay the revolving credit facility. So there's no personal money from our jobs, for example, or savings that we had that's left in this little portfolio. It looks after itself. It has enough income coming in to cover all of its costs, and it's even been able to pay for its own upgrades. And of course, we've used it to continue to grow. So a little 7-year snapshot. So Salesh was talking about 7 to 10 years before. The little first house in grey there was the initial property that we're able to secure a $300,000 revolving facility against. Then in red, the 4 houses that were purchased in 2015. Don't move particularly quickly. It was another 2 years before we bought a property with 2 houses, and then another 2 years before we bought a property with 3 dwellings on it. 2 years later, sold the original, sold the little house that didn't pay for itself, and sold the original home, and that paid off the property with 3 houses on it. So now they're loan free. And so is the little 2-bedroom unit. So with the cash flow from that, we're able to purchase a house, a home on quite a bit of land, and are now renovating that, or we'll start renovating soon, and adding some rentals to that. Salesh.
Thank you, Maggie. You know, if you're listening to this, sorry, I'll just put my camera on. If you're listening to this, guys, like, you look at how Then and Maggie have grown their portfolio,
I think this is a question from me have I been hit hard by interest deductibility rules? Does the passive income still cover the costs? Though equally, that could be a question that applies to all 3 of us. So
that's a really good question,
yeah.
really good. So Maggie, what have you done with your portfolio regarding that?
Well, the way we were structured in the preceding years, we actually accumulated tax losses. So thus far, we've been okay with the loss of interest deductibility. It's very annoying that it's our accumulated tax losses are being used up.
Yes.
But it hasn't been a problem so far. But fingers crossed for a change of government. Otherwise, be pushing rents up to make sure they're all sitting at market rates.
And this is it, guys. Like as you guys are listening to us, it's very important to understand if you are a landlord, the rent has to go up. The rent has to go up to recover your cost. Even though you can tell me you're debt free, your cost is still going up. It doesn't forget about interest. Your cost is going up, so it's going to go through the roof.
Yeah, so, insurances are going up a lot this year, I noticed, as the renewals come through.
Yeah. Now, what I'm going to do is I'm going to tell you how I started and how I got my portfolio going, and we'll jump in and answer some of the questions as we go. But, like I said earlier, I'm a property investor, and I think hard. And while I got off the phone, I've just offered someone, I can show a message to, if no one believes, I've just offered someone to buy 4 houses of them. So I'm a very, very active investor, The way I get around my interest deductibility, I get 100% deduction. And the way I get 100% deduction is because I've been doing social housing. Now, I provide all my houses to social housing providers, and I've done it for the last 13 years, and it's going to be my 14 years of social housing. I didn't go into social housing for tax purposes. I was already doing it. Right, because I knew the provider. So that's how I get my interest deductibility. Now, the other way you get your interest deductibility is if your CCC was issued after March 2020, or you're buying a property that is brand new, you get that. But the biggest thing is make sure you vote for National Act, so you get all your deductibility, and they promote growth for hard-working Kiwis, which is mum and dad investors. They want mum and dad to work. They want mum and dad to invest in properties. That's your party there. So a little bit of background on me. I started at GRA in 2007 as a graduate accountant. Back in the days, you come in and the clients walk up in 2007, throw a shoebox at you, and here's your, do your data entry and GST returns, and I'll do all that. Funnily, some of the people that listen to me now are those clients' kids. They listen to me. The clients that I used to prepare to, data entry and GST returns, they listen to me now. So I was broke with about $47,000 worth of debt, and I still remember this day quite well. I owed $30,000 on student loan. I borrowed $16,000 to buy a black Ford Falcon because I live out west, so you've got to look good, so black on black. And then I spent $1,000 on Megwoods, which I borrowed as well. So it was 47 grand all up was my debt level. And today I have $50K a month in property growth. Whatever I do, I make minimum $50,000 a month out of properties. And I love it. When the market went quiet, I went and started buying hard. The market's lifting up, but I'm still putting offers out every day, right? And like I said, as I was presenting and I came off, I went and put an offer on the property. And I put an offer on the property yesterday as well. I got it under contract. So here's how I started. For 2007, $47,000 worth of debt, and I was about 22, 23. 2010, I bought my first property, right? I started buying in properties. 2010 was dead. You could not get bank funding. You could not buy properties, right? It was absolutely dead. So once I started buying properties, one of the things that I've noticed, money became a problem in terms of financing. So I started hooking up with people that love property investing, but didn't have time. So I started, and those business partners are still with me. So today, 2022, we have over $42 million in our property portfolio as of today, right? And we're cash flow positive. We're about 400 to 500 grand cash flow positive. We're less than 50% geared now. And any surplus income we get, we pay off our debt. Our priority is to pay off our debt. And the reason I pay off my debt is because I don't want the banks to control me. I want to be friends with the banks, and I want to get what I want by paying off my debt. So all the banks have become good friends of us and the way we do business, right? So, and I aim to make $50,000 a month in property investing, either through trading, buying and selling houses, doing up with them, or development properties. So we're developing 1%, and I'll show you the numbers shortly on that. And we're just starting another development as well. So we do developments of 3 or 4 houses. We don't try and do anything bigger because we like to have control of our portfolio. Now, what I want to show you is cash flow investing. This is cash flow investing, basically property that I bought, I think 2 years ago, 2.5, 3 years ago. We bought this for $515,000 in Rotorua. So you can see front house, back house. The front house has a little 1-bedroom unit as well. We spent $35,000 on renovation. Total cost was $550,000. Our projected market value back then came at $850,000, so we got to refinance and use our equity, right? We always like to buy properties, refinance, and use our equity. We get currently $1,300 a week rent, $67,000 a year. After all our operating expenses, we get net yield of $56,000. And at the moment, we are 70% financed on it. So $15,000 goes out for interest. We got $41,000 coming in passive. Now you got to remember, we didn't put $1 into this, and we get to own the property, and we get $41,000 back, right? All we're doing is taking the money and paying off debt. That's our game plan here. We don't want any dividends. We don't want to use the money. All we want to do is pay off our debt down, and that's what we're doing. So here's what it is. Cash flow investing. We got 3 lots of income, right? Land banking. We look at the size of our land. We can demolish these 2 houses and we can build 10 units on it. I've got a planner working on it at the moment. I don't know when I'm going to do it, but I've got it going, because if I can build 10 units, I will actually look at building that. So that's what we got going in Rotorua. This is the kind of stock we chase, and there's so many of them out there. I've got clients buying better stock than I am because they're looking harder than me. So they all exist. Here's another one. Now, I'm going to take you back to 2010. This was one of the first or second properties that I bought. I bought it for $320,000. I spent $320,000. It was the front house and a section. I spent $290,000 building the second house and renovating the front house. The projected market value came at 1.6, so the instant equity was $990,000. I got to refinance and use that money to buy more houses. This was in 2010, 11, I was doing this back then. And my formula has no change. This is the kind of properties I chase. I chase big land, cash flow investing, and that's it. And so currently it's rented at $1,200. Now the rent has just gone up to $1,500. So it's rented to a charity as well, government social housing providers. My outgoings is about $7,500. I've actually kind of paid this property off, so the interest rates is irrelevant to me. I get $54,000 a year out of this after my operating expenses. That's all the money that's coming to me, because what I've done over the last 10 years is all the rent that came in, I paid off the debt. So it's freehold. I get that $54,000 in my pocket. I take the money and put it against other properties anyway. That's what I'm doing here. So here's another property, land banking in New Lynn. So what you got to understand is land banking and double income or triple income on a property is very important. So has 2 dwellings. So the section is 1,600 meters squared, bought in 2018 for 1.21 million. The value on that day was 1.4 million when I bought it. I said to the banker, I don't think it's worth 1.4. He gets to me, who cares? Your instant equity is 190 on our books. The value now is about 2.5 million because I can pull 15 or 16 units on this, right? And I basically gain 1.3 million in 48 months. So that's 24K a month in growth you get out of this kind of properties. And this is the kind of units we can build on it. So this is an example of land banking, cash flow investing, and all of that. This is what I chase every day. I chase this kind of investment properties. And if you buy 10 of this and they're cash flow positive, it works. Now, like I said, I do social housing. So all my properties are rented to social housing providers. And so I get passive income out of that, and I get interest deductibility. And I'm banking on my land. Now, here's some of the recent examples. In the last 24 months, there were some of the properties we've bought in Rotorua. So the reason I'm promoting some of this stuff, and I'm telling you, because these are the properties that actually do well over time. They grow in value and they do well. So here's a house we bought in the front, 500,000 including renovation. Then the rear one came up for sale. We bought that one as well. So we bought both the front and the back. What we're going to build here is about 20 units. We're going to put 10 in front, 10 at the back, and we're going to have the driveway coming in and going out. So all up, this has cost us $1 million, and we get about $1,200 or $1,300 a week rent. Now, then what we did was another property we owned was this one here in Rotorua again. We have front section and a back section. We get $850 per week rent. Our neighbor came up for sale. We ran and bought our neighbor as well. So all up, we paid $1 million for both properties with 3 lots of income coming in, about $1,600, and we got $2,000 of square meters of land. Again, we can build 15 to 20 units on this site. Now, this is why we've gone and bought 31 sites in Rotorua, because when if you take Auckland back 12, 13 years ago, this is what happened in Auckland. If you didn't buy those properties with big land, you couldn't subdivide, the prices went up, you couldn't buy them later. So we bought as many as we can, and now the rules are coming into Rotorua where you can do high density building. Actually, all around the world, you're going to see high density building because the cost of building is so high. There's no point in just building one house. People are now building 6, 7, 8 houses in one section because of the cost of building. So this is what we do. Cash flow investing, positive, land banking. These are examples of our properties. So some of our current strategies in the market is, and some of the current things we're doing. So this is our latest purchase. We bought in March 2023. We bought it for $480,000. We spent $50,000 on renovating. Total cost was $530,000. 2 dwellings. We can subdivide that. It's rented to a social housing provider at $900 per week. Our total cost is $530. We're renting at $900 per week, and we got it on a 5-year lease with a reinstatement clause. What it means is if you break the house, you fix it. Fair game. We'll give you a tidy house, but if you break it, you fix it. So that's why we have it rented at, and so we get $900 per week. Again, 2 dwellings, big piece of land. Here's another one we bought in January this year. 1,000 square meter land, development site. Paid $380. We renovated for $60. Total cost was $440. Market value is $550. Equity gain $110. Rented at the moment is $600 per week. Social housing again, rented to social housing. I have shown these numbers to a lot of investors, and they've come to me and said, hey, how do you do this? How can we get into it? And a lot of investors are following us. So these are good examples. And the reason I want to show you this is there's easier ways to make money. So some of the properties you aim is this kind of stuff. And this is good for mum and dad investors, and over time, they are going to go up in value. So this is another property that we bought that actually went wrong. Then, do you want to explain what happened? You're on mute then.
Oh, yeah, sweet. So we originally bought this property to renovate it to sell. So we wanted to trade, but this was in the peak of the market when we settled. And so the market started turning. So we know when we do the renovation that we we're not going to get the end value, but we've decided to, approach a social housing provider and convert this into like a boarding home. And it was originally a 3-bedroom house. It's now an 8-bedroom. But the great thing about this is around the neighborhood, if there are new houses are popping up, so the surrounding is going up in value. So we've done the renovation and actually to convert this property to standard that we want to give it and lock it and forget about for the next 10 years. We spent about close to 400,000 and it rents for 2,000 per week. So with the future 7-lot potential. So the thing is that with property, you know, with anything, there's also the element of risk, and you got to also have plan B and work through those solutions so that you don't get stuck. Because imagine if someone came out and said, "Oh, I saw this that installation there didn't. I want to do it," and didn't get it right the first time. That kind of sets you back because you got to wait a long time to go again. So that's where knowing what you're doing in education and having the skill set is such a key thing.
Yep, and again, like we not everything we do comes right.
Yeah,
that's
we
what
make mistakes too.
we make mistakes as well. And what we can do is share it with you. And don't trust me, when we make mistakes, we don't go, "Oh, it's okay." It's
oh no, we drill hard on each other.
Yeah.
Oh, how did we get it wrong?
We say things like, "How can you be so dumb?" Poor thing gets the end of it.
Generally, the language is a little bit more colourful too.
Yeah.
It's less phrases and more harsh words. But that's just the way property does. In business, you learn from your mistakes and you don't repeat them.
We try not to repeat them.
Yeah.
A couple of quick examples from me, just upgrading existing rentals. So you might find they get tired and start looking awful, like the one on the left, after a little while, and then your rent falls behind, perhaps behind market rent. So this instance, 2 big rent increases for not a big spend. The house on the left went from $500 per week. And what did it have done on it? Sorry, not painted the kitchen cupboard, some new vanities, I think, new carpet, fresh paint inside, new curtains, a good wash outside, tidy up. So didn't even replace the kitchen. That rent up to $950 per week, so $450 per week rent increase on a approximately $50,000 spend. The one on the right, it had a similar spend, but were able to claim insurance and got a decent amount of cash back. Rent went up $250 per week after an internal refurbishment, and tenants that had worn it out.
If you look at this, like Maggie's gone and spent 50 or 30K, like forget about the rent crews. Maggie had to do this renovation, right, Maggie? You had to do this. So the beauty of this, if you look at this, sometimes you have a property, you go, "I don't want to touch it. I'm getting $450 per week." No, if you are going to renovate, you're going to present a good property on the market. You demand your rent because you are presenting something good. So, and that's what you got to do. A lot of investors, they want to become slum landlords, and we are not one of them. We try not to be a slum landlord. We present our stock really well. Yes, we might get a slum tenant who's going to ruin it, is going to come and break it. But that's why we have clauses in for reinstatement clause, social housing, and all of that. And to be honest,
I've never had cover.
Yeah, insurance cover. In 13, 14 years, the only way my properties have been damaged is actually through natural causes, flooding or, wind or trees falling onto stuff. That's it, So as landlords, we should look after our property. We should make sure they're well presented, and we should charge for it, right? If it's like if you drive a small car, you pay 40 grand for it. If you drive a nice expensive car, you pay 120 grand for it. Same thing with houses. If you present a house nice and well, you charge more rent, and people want to pay for it because there's shortage of housing. Everyone wants to live in a good home, and they'll pay you for it.
Definitely.
Yeah. And so here's an example of our development that we are doing. And then, do you want to run it? And tell us
so I've got the privilege of project managing this, which is great because it's the next step of from what I was doing from renovating, but this is from a whole new 4 new houses. So almost upon completion, as you can see on the top, that's the architecture drawing, and that's the photo as of today. What it looks like. So we're just getting prepared for vehicle crossing and driveways to be poured. But this is bought for 1.5, the land and subdivision cost. building cost is roughly about 1.5. So total lot will cost about 3 million. The market value upon completions will be ranging between 4.6 to 4.8 million. So there you have an equity gain of 1.6 to 1.8 million. So pre-tax profit of 1.1 to 1.3. And we're looking at about, getting title and everything issued for the next 3 months.
Yeah, and it takes 12 months to do a project like this, but you can see the profits are high. Now, what we're not saying is if for everyone to go and do this, the numbers are big, we agree, but we just want to show you what we are doing in the market, and guide you through. Now, what you can do is if you find good bargains, you can even just put a normal 2 or 3 bedroom house at the back, subdivide it and sell it if you want to do trading, and make your money like that. Yeah, thanks, Then. So how do you start? You've been listening to Than and you've been listening to me, and you go, oh, this is so complicated and all of that. We agree it's complicated. We're not going to lie. But once you understand everything, it actually becomes easy. And all you have to do is put some effort into understanding what property is about. So what we've done is we've done a little roadmap for you and to get you thinking where you should be going, Work out where you are now. Like, if you've got a comfortable life, you've got a nice house, 2 cars and all of that. And how can you move forward? So you can refinance and do things like that. Work out where you want to be. So what do you want in your life? What's a 10-year plan? Always have a 10-year plan. I know, and I was reading something the other day. I think it was about Bob Jones. He has a 30-year plan. I only look forward to a 10-year plan. I think 10 years is a long time, but he looks at 30-year plan. So work out where you want to be. So get the right knowledge. Go to property school. Property school is one of our schools that I talked about earlier. We teach you basic property ideas, basic terms, and that trains you up how to negotiate. And if you're good at that, then you're like, oh, I want to do something else. Do development school. It doesn't mean you become a developer, but you can do it to understand. And the good thing is when you sign up for this property school, you can access this for the next 12 months. You can keep accessing it. Come up with a strategy, so get your advice, get the right people to surround you. So you get the right lawyers, right accountants, right mortgage brokers, people who believe in property investing. Then what you do is you get your right structures put in. Structures are so important. I'm going to tell you this now. Please do not buy more than 3 properties in one company, right? I have seen clients get in trouble with the banks. As soon as they've gone and bought a 4th one, they're now considered commercial because you've got 4 properties in one company, which means your loan will become 15 years. The term of the loan will be 15 years and the interest rate will be a commercial rate, 10 or 11%, right? Which will put a lot of pressure on that. So structures are very important. So come to GRA, sit with us, we'll work out your structures, and based on what you want to do. If you want to trade, we'll give you a trading entity and a holding entity. And then we look at arranging your finance. The structures are important before you get your finance, because once you have the structures, the banks can give you the finance in the right entities. And once all that is in place, you go out and you buy the right house, and you can use people like Than, Maggie, or me, or Matt if you got issues or questions or you're nervous, Than and Maggie will be your first point of contact. They should be able to answer 99% of your questions. If they can't, they'll flick it across to Matt and I to look at it. And if we can't, we'll get a town planner involved. And Maggie and Than will get a town planner involved before even getting us involved if if you need to. Town planners don't cost much money. You could use them, for a couple of hours, $300-400. You get the right answer, So very important. You go through a structure process. It's like when you wake up in the morning, everything's structured. You have a shower, you put your work clothes on, you get in the car, go to work, you stop and have your coffee, That's what property investing is about, putting a structure in place. And surround yourself with the right people so you can ask the right questions. Then, Maggie, do you want to add anything to this?
Really, just the importance of getting that advice and the whole setup correct at the beginning, because you think, oh God, that's going to slow me down by 2 months or 3 months by the time I do all that. But it's absolutely invaluable, as you don't waste 2 or 3 years if you've accidentally gone out and bought yourself a property that's turned out to be a dud.
Yeah, and when you do property school. And something that when you do property school, you'll see Maggie, Than, Matt, and a couple of other guys in there. We learn successful investing theories, so some of the things that you should be following. We give you our Wealth Suite, which is a software, and we let you try it out for 7 weeks, and just so you can get a feel to work out your wealth and where you want to be. There's a huge amount of high value content, a lot of information, and you got to remember there's about 100 years plus of experience in there. So there's a lot of investors that have spent years becoming an investor, professional investors, and are successful, and they're giving you ideas. And basically, they were like you, mum and dad investors, single people, or now the kids have grown, and the kids don't want to hang around with you, which I'm always scared of. My kids won't want to hang around with me, right? Because it's happening to all my friends, because they think it's not cool to hang around with mum and dad. Once my daughter actually jumped out of the car while it was moving. I dropped her to school. She was so desperate to run away from me. And I said to her, I'm not that bad looking, And so I'm always, so now you're going, what am I going to do in the next phase of my life? Well, get into property investing. It's fun, Last weekend, I had nothing to do and I was so bored. I bought a waterfront house and I was looking at the sea and going to myself, why did I buy a waterfront house? Like, why am I looking at the sea? Because I'm always a doer. I like to do something. I like to look at properties. I like to analyze deals, and like Maggie said, avoid being sold out properties, and you become a confident and informed investor. That's quite important. So this is what we teach you at property school. A lot of our clients have done property school, and they understand all this quite well, and they've become very successful. So we've been doing property school for the last 10 plus years now. So it's the reason we're promoting property school is not to make money. You can see it's $495. That's not going to make us rich, and all of that. But we'd like to share knowledge. That's why we do it. And the reason we sell it for $495 is just to recover some cost. It's an online on-demand course, so you get access for 12 months, and you get access to the Wealth Suite as well. Now, if you sign up today, because Maggie and Then and I are a bit generous, you can have the 2 books. Normally, we give you 1 book. You can have both books because we just want you to get knowledge. Now, if obviously Amy will get upset, that's our PA. She gets upset, so you just say Then approved it or Maggie approved it. Don't mention my name.
Blame us.
And part of signing property school is you get a free initial meeting, which is 500 plus GST an hour. And if you look to sign up for property school, you book online. That's the details there. Now, look at this. Okay, normal price is $595. Today, get it for $495. I'm going to ask Maggie a question. Maggie, when you got into property investing, what did the course cost you? Sorry, I got.
I think it was about the same price.
No. When you got into property investing, you went through the course and you met GRA.
Oh, yeah, you mean the expensive one. Sorry, I thought you meant property school, and I was thinking, what, something like that. It was 30,000 plus GST, I think.
In 2015 or 14, you paid that?
14.
And then you joined property school, and that's how we met you, didn't we?
Yes.
Yeah. So Maggie was a property school student. Now Then's a little bit slow. He's got low IQ. So what did you spend then on your education, your property?
First year I spent the same amount as Maggie, but then
yes, we did the same course.
Yes, and then I was like, oh wait, maybe I missed something, so I did it again. But no, so I spent in general to date, I spent about close to $100,000 in education, and learning for me never stops.
Yeah.
Right. So and that's the most important thing. As long as it's to make money, it's to grow, to be successful, and that's why I did it. And also the other part is to be surrounded by like-minded people that will push me and drive me to get ahead.
Exactly. Now, what I'm not trying to say is those courses were not good. They were bloody good courses because they helped Maggie and Then, it did help them, So what I'm saying is if you do property school and do one of those courses, it kind of helps to understand. Property school is very detailed. And, whereas those kind of courses that you do for $30,000 or $25,000, they take you up slowly, whereas property school gives you all the information. So what we are saying is, if you do property school, what we're saying is don't do those courses. No, we're not saying that. If you do property school, yes, I mean, if those courses work for you, you get the network going, we encourage you to do it, We encourage you to do those courses because 30 grand or 25,000 is not a lot of money. If you're going to learn how to trade with the people with like-minded, you can make that money within a couple of weeks if you do it properly. Or if you buy the right kind of holes, For example, you bought a hole for 500,000, it's revalued at 700. You just made yourself 300 grand, you know? And most of my clients that I've met, they went through some of those courses and they've went and bought holes and done really well in their lives, you know? So where to from here? You know, you've had me talk, and you know, you've had Maggie talk and Then talk, and we've been doing all these ideas. What I'm going to say to all the listeners is, don't do nothing. You know, you act sooner, not later. Every time I talk to someone, anyone I talk, I wish I did this 10 years ago. So if you put a mark on your calendar today or your phone today, or take a photo of all of us and put it on your phone, 10 years later, look at it and you'll be like, shit, why didn't I do it on the day when Salesh and Maggie and Then told you, right? So as a professional property investor, I do it every day. When someone goes to me, when is the right time to invest in properties? It's never. Every time I buy a property, I'm like, oh man, I've been ripped off. You know, so I feel like that. Properties are not cheap. Do you agree, Maggie and Then?
They're definitely not.
But when did you buy a property and go, oh, I bought a bug? You know, it's just everything's expensive, isn't it? Everything is expensive. So don't use lack of time or fear as an excuse, you know? So don't tell me, oh, you don't have time. You know, well, if you've got time to read your Facebook, Instagram, and whatever other social medias are, sorry, I've got out of social media because I think it's an absolutely waste of time. You spend 2.5, 3 hours a day on social media, it's rubbish. You might as well go and get a second job and make yourself a little bit more money, you know? And so I've deleted all the apps out of my life. I watch Trade Me, and I read the fake news from Errol, but that's about it. The fake property investment news, you know, that's about it. And Herald is normally three months behind with their news. Oh, the rental prices are going up, or rent is going up. Well, that's 6 or 8
You
months.
knew that a long time ago.
Yeah. You know, property prices are go up, yes, because we've been at auctions and we've been losing. Yes, we know that, you know. So normally Herald is 3 months behind. Draw yourself a timeline with Target. You know, so let's say you're 40 years old today. In the next 10 years, when you turn 50, where do you want to be? You know, that's important. Surround yourself with the right people, you know, people who believe in properties. You know, you got to surround yourself with those kind of people. You can't go to your family members who are so negative about property investing. You got to look at people who like property investing. And then if you're a couple, you talk to each other and you get yourself in the right space and learn all the theories and everything. It's not hard. You spend a few months learning, you understand the terms, you know. Think long term when it comes to property investing. You know, that's what you've got to do. You can't think short term. Now, I'm going to show you a very important text messages that I was showing it to Maggie, and Maggie got us to put it online so clients can read it. So this is a particular investor. I'm going to try not to say his name. This is a particular investor that came to see me in 2008 and 9. He was worth negative 1.5 million, right? So this is a text that's a couple of years old. So I'll refer to him as client. He goes, I've been updating my Wealth Suite. He uses Wealth Suite to follow or to track his wealth. I'm sitting around $7 million just in property, being big gains in the last 12 months, probably in the last 6 months. Yeah. And so this is me in blue. You should be over $10 million in net worth. Now, why I'm saying to him is $10 million over net worth is because he's got businesses as well. At that end, you have done well, mate. Wow, yeah. Maybe $10 million doesn't feel like it, but thanks. You've helped a lot. So appreciate that too, bro. Now, what it means is when he came to see me, he was negative 1.5 million. So the day we were communicating, he's gone up 11.5 million in equity. You know, it took us 10 years to get this result, but he's 11.5. He's actually one of my business partners as well now. Now, if you read my last text message, and you're more than welcome to take photo of my last message, that is my golden rule. I do not change from that. I think it's just sticking to the game plan. Buy properties, pay off debt. Buy good assets, land bank, cash flow positive, etc. That is my golden ingredient. It never changes. I just stick to that. And Maggie and Then, do you agree?
Mm-hmm.
That's the
Yes,
principle, right?
it's no different to what you've been saying tonight.
Yeah, that's it. And this is a text message from a couple of years ago, no? That's what it's about. So stick to a game plan, and that is my game plan. And I never come off my game plan. Yes, I get nervous some days. Yes, I get stressed some days, and Maggie and Then would know when I get nervous and I stress, you know. But I pull it off because you got to understand it's you buying the right assets, you know. That's important. So that's quite important. So now we're going to wrap up and we're going to answer your questions and we're going to interact with you. So flick those questions through while we're wrapping up. If you're not a GRA client, you get a free initial meeting with us as well. So if you need, which is worth 500 plus GST, where we talk about asset protection, tax planning advice, and accounting service. Now, if you are a GRA client, you like us to do a review and all of that, we can do this for you. And we can obviously discuss the hourly rate on it, and depends who's doing it. All the partners at GRA are about 500 plus GST an hour. And trust me, in those minutes, we deliver. We're not sitting there socializing with you. We give you very detailed information. Now, if you need one of those meetings, please contact Amy. That's the contact details there, and she'll organize a meeting time for you. Now, this is some of the feedbacks we've been getting from clients and things like that. So while we answer questions, I'm going to just leave it here. So if you guys need access to Amy's details, Maggie, should we start answering the questions?
Yeah, absolutely. After a few minutes, do you want to pop it onto the next slide though, so that people know
Yes.
where to go to if they want to enroll? Because we did have one question about the promo code. It's
Yes.
not a promo code, it's just a specific URL that
Right.
you need to go to.
Yes.
Right, questions. How do you find good properties, from Jennifer?
Okay, how do we find good properties? So there's a few ways of doing this, right? One way is either get a property finder. So a property finder, and you pay them a fee, 15 or 20 grand. But a lot of people go, oh, that's a lot of money. Well, no. If a property finder finds your property, you're making 300 grand equity, 15 or 20 grand is nothing to make yourself 280,000 equity. So basically, if I said to you today, give me 15 grand, I'll give you 280 grand back, 100% of you will say yes. So you get a property finder going. Or the other thing is, if you can't afford a property finder, do what people like Thea and Maggie and I did. We were looking through Trade Me, and we were going to open homes and auctions and things like that. So you've got to be in it every day to know what a good deal is. You cannot just wake up and say, I'm going to look for a good deal. You got to understand the market, work those areas, and then you will find a good deal and get the property.
Exactly, because if you don't understand your area and you don't understand what things are worth at that time in that specific location, you won't be able to identify a good deal.
Exactly.
And if I may add, like you said, getting to know the area, but get to know the agents, build that relationship, let them know that you're out in the market for looking for XY set of property, and so that you're building your network of people. Just like any business, this is a business too. So treat it that way and grow your team that's around the market.
Maggie asks, do you recommend investing regionally if one lives in Auckland, or is it best to be close to your portfolio?
Well, what you got to understand is when you buy properties, right? You're not going to live there. So it doesn't matter where you buy properties. That's so it's all about cash flow. It's about positive returns. It's about land banking. So if you look at how I'm presenting, I'm saying anywhere in the country, the rent is through the roof at the moment. So you don't have to just buy where you live.
Yeah, absolutely. And you can always travel to check your properties if you want to put your eyes on them every so often yourself, or use a property manager. But definitely no need to purchase exactly where you live.
Exactly. Plus, you don't want to be facing your tenant every day. That's the last thing you want to do.
Fred asks, how do you manage interest rate hikes? Split to fixed rates? Well, we always fix.
Yeah.
Unless it's a very short-term trade, you might be on floating. That's what I've used floating for. But
correct. And the way I do it, is I try and fix all my loans for 5 years because of the size of the portfolio. I don't want to carry risk. So I always try and look at 5 years. And look, sometimes I go, I'll try a year, but I've just worked out that 5 years is better because what do you got to remember? If I'm booking, say, let's look at 7%. If I'm booking 7% right today, I get 39% tax advantage. So my real cost is 61%. So my real cost of interest is 4.27% after tax. This is why interest deductibility is so important. Right? All the smart investors understand this. Let me repeat that to you again. If you're paying the bank 7% interest rate and you get your 39% tax advantage, which means your real cost is 61%, your real rate is 4.27%. If I said to all of you there, you get an interest rate of 4.27%, you all will rush out there and fix it, right? So this is how experienced property investors get this. They go social housing, 100% deductibility, buy properties that have new CCC, so all of that. So that's how they get their deductibility. Now, the other thing is, if you like, so I'm not a financial advisor, but this is some of the things I do in my portfolio, is let's say there's $1 million a loan, you don't know what interest rates are going to do next year. What you can do is you can spread your loan or say 400 grand on 5 years, 200 grand on 2 years, 400 grand on 3 years. So it's just spread out. You can do things like that as well if you want to mitigate your risk.
Yeah, so you don't have everything coming up for a refixing at the same time.
Correct.
What would you do if you were starting from the beginning in this economic environment?
So I personally have thought about this a lot of time, and I go, what would I do from my experience? What would I do? Based on your cash flow. So if you've got good cash flow, tick, borrow some money and invest. Now, let's say your cash flow is tight. What you do is you go and look for friends. And I've seen now the banks promoting, buying properties and investment with your friends. And you become JV partners. And you buy properties together. You grow together. You might have 2 or 3 business partners that you can put money in and buy together. And in this environment, I'll be chasing cash flow positive and land banking assets. Land banking is very crucial, right? Because you can put a second, third, fourth dwelling over there, and you'll be looking for cash flow positive. And cash flow positive properties exist. They're out there. I find them every week. That's what I'd be doing.
Then what would you do if you were starting now?
Yeah, I mean, having the skill sets, I mean, like you said, it's what you're personally capable of, where you're sitting at. And, if I was starting over again with the same platform, I'll be going back into trading and already into trading, build my capital. I'll be, at the start when I did bought a lot of properties, I traded a lot. Now looking back, I probably would have and should have kept some that which was good margins, that was good cash flow, because that time I was just too much heavily invested in trading. So that's one thing that I would change going back and starting again, is trade some and hold a little bit more from what I did originally.
Maggie, what did you do?
Potentially buy rundown houses that we can renovate your own home, but renovate while you live there. If you've got the skills, that's a good way to get ahead as well. We could repeat that a few times. Or buy property that has the potential to add a dwelling or more than one potentially to it.
Yeah, I'll tell you guys a secret that some really, really successful person actually said to me. He goes to me, Slish, you know what the problem is? And I was like, yep. And he goes, people are so scared to lose money. He goes, if you don't take risk, how are you going to go forward in life? And the same thing, he's very, very successful guy. And then I was reading the Herald the other day, and Graham Hart wrote an article, he just said, Kiwis just don't take risk. And you have to take risk. You have to take risk. But the way you do it in properties, it's a calculated risk. Yes, if you stuff it up, you lose 100 grand, 150, 200 grand. If you do well, you make 400, 500 grand. So you calculate your risk. And if you are able to put $200,000 up as your risk money, you'd proceed and do it because you've already calculated that, And I always said in presentation, I've said it over a few years, my risk rate is $1 million. I'm happy to risk up to $1 million knowing that if something went wrong, I can lose $1 million and still go to bed. Yes, I'll slap myself and I'll get Then to or Maggie to slap me as well, right? But what I'm saying to you is, if I did a transaction with Then and we went and bought a property and traded it, let's say for 700 grand, and we spent 200 grand renovating, and we sold it for $1 million, I made 100 grand. But if we sold it for 800 grand, I lost 100 grand. Now my risk radar is $1 million. I lost 100 grand, right, in that deal. But you gotta have something up for risk, and that's how you move forward. We gotta come out this comfort zone and just take that calculated risk. I'm not telling you to go and put everything on the line. I'm saying it's a calculated risk. That's how I look at things now. I don't know. I don't know if that made sense, Then or Maggie or any of the listeners.
No, it makes sense because whatever you do in business is, there is an element of risk, and it's what are you prepared to lose. But in property, you can have backup plans.
Yeah.
If I can't sell it for that profit, okay, that margin, can I hold on to it? Can I rent it out for a certain period? And then when the markets pick up, sell it. Then, those are the options that you have to look at it before you go guns blazing, going, I want to buy this, buy this, buy this, buy this.
Exactly.
Yeah, you can pivot and deploy a different strategy. I can't say I really like the idea of losing money.
No, but that's again.
So
No. What you
always
said
like
is
to buy
right.
something that's got
Yeah.
viable options, at
Options.
least two
No,
viable
but-
options.
Yeah, and I totally agree what you said, Maggie.
Mm.
Like no one likes the idea of losing money. No one. But you kind of have to risk. Like you took risk, Maggie, to move forward. You have to take risk to go forward. You cannot just sit there and say, I will not take any risk. And the beauty about property investing, and there's 3 investors sitting here, we know property investing is calculated risk. You do it properly.
Exactly. Go in minimizing the
Yes.
risk and only.
Yeah, exactly. What's
Yeah.
our next question, Maggie?
Is it possible to buy cash flow properties in the current market?
Yes, 100%.
Mhm.
We are chasing it every day. I'm seeing it. My clients are buying better properties than I am. So yes, it is.
I think to answer that question is also your offer should be based on your cash flow.
Yes, exactly. Do your cash flow. And sometimes what happens is people look at a rundown property. Oh, the rent is only $500 a week. Well, you should be looking at it. If I spend 50 grand, can I get $750 per week?
Mm.
That's what you should be analyzing. Don't tell the agent that, because the agent will tell every other investor in town. What are you thinking? So
What your idea was.
What your idea was, and then maybe you renovate the house, and maybe you can put a second dwelling at the back, a 2-bedroom house for 250 or 300 grand. So that could bring $600 a week. So you do things like that.
It's about getting your eye in so you can spot opportunities.
Exactly.
Because they don't sit there on Trade Me saying I'm a great opportunity if you do X, Y, Z.
Exactly. And you've got to look at it and work it out, Yeah.
Simon asks, are commercial properties also worth considering compared to residential properties as part of an overall property portfolio?
Now, I'll just talk about commercial properties. I like commercial properties. I've got 3 of them. The issue with commercial properties are your loan is 15 years P&I, no exemption. So you can't go interest only or anything like that. 15 years P&I, you have to pay a loan within 15 years. Right? And so what happens, it pushes most of the mum and dad investors out. Your commercial rates are nearly at 10% at the moment. So they are expensive. So you got to make sure you get the right returns and all of that. So for most of mum and dad investors or business owners, because of the 15 years P&I, it puts a lot of pressure on the cash flow. They kind of avoid it, and you need 40 or 45% deposit.
Tina says, how can we structure so we can borrow more from banks to purchase as many properties as we can?
Fantastic question. So one of the things you've got to do is, like I said, use a company. You could have one company just dealing with Westpac, one company dealing with ANZ, keep them separate. It works. I don't care what mortgage brokers say. I've got more properties than mortgage brokers. I've done more transactions than mortgage brokers, and I've given clients more advice than mortgage brokers, right? So, and I drink and I go out and hang around with bankers, and I know how they think. You must use different entities. Very important. Otherwise, you'll buy 2 properties or 3 houses and you can't buy any more because the banks don't want to fund it. So use different structures. Now, the other thing you should be looking at doing, Tina, is if cash flow is becoming, well, not cash flow, serviceability is becoming an issue, you look at doing JVs with your business partners or your family and friends. That's how you're going to grow now, is get all these people together and get them to put money. Or you might have the deposit, someone else has the income. You combine that together and make it happen as a friend and grow together.
Yeah, because half of something is better than nothing at all. Also, a good broker, work with a good broker such as KPM, Chris Peterson Mortgages, that GRA recommends. And experts in getting lending like that. They may have some good tips and suggestions.
Yeah,
How to
and
maximize your ability to borrow.
yeah, and Chris Pedersen is one of the best mortgage brokers in town. So if we don't have his details up here, if you can email Amy, she'll forward you Chris Pedersen's details. So that's Amy's contact details. So if you've got any questions about today, just flick an email to Amy. She'll fix you up.
Do you think Auckland market prices are high to the point it's rare to find freehold homes with development potential that are cash flow positive?
Well, to be honest, if we go to South Auckland today, we would find big land with houses on, and we can probably pick them up for 1.1 million, or maybe double income, 1.1, 1.2 million. They do exist, and they probably exist in West Auckland as well. So those are the areas you need to focus on, and depending on what your budget is, Warren, if you've got like 700 grand to spend, or you got a place like Rotorua, they've got same rent as Auckland, bigger properties and all of that. So it's just cash flow positive. Rotorua properties are going to keep going up in rent and prices because they've got two crises there. They've got housing crisis for social housing, and they've got housing crisis for normal tenants, which includes a lot of people moving into Rotorua because there's so many job opportunities. So that's what's happening there. So it depends what your budget is, Warren, and then based on that, you identify area and work those areas. Like I said, anywhere in the regions at the moment, you're getting some insane rent.
I think on Auckland pricing, though, you'd probably be hard pressed to find a development property if it just had the one house on it that was cash flow positive at the time that you buy it. But the point is that you then create that positive cash flow for yourself by developing it, by identifying what you're going to do with the property.
Yeah, exactly.
Any tips to find properties in Auckland?
Get property finders, become good friends with agents in those areas you want to look at. Agents are important. Once you're friends with them, they call you with deals. So that's quite important. So that's the way I'll get a property finder.
What is the sweet spot? Is it better to start investing in cheaper, lower quality properties as one is building the portfolio, or better to invest in high quality assets and high quality locations from the start?
To be honest, I don't think there's such thing as cheaper, lower quality in properties. If you look at, say some of the lower areas, you can look at, if you go to, say Papakura, 1,000 square meter land is about $1 million. To build 7 or 8 houses, or units on it is about 2.5 million. So 3.5 million. So they're not cheap. So if you were starting to invest, you look at areas where you can afford to buy. So properties is never cheap. This is why rent is high, right? So you go to outskirts of, or go out of Auckland, smaller towns as well, you're getting good rent. So it all depends on your budget and your serviceability. When you say quality areas, I presume you'll talk about medium and higher areas, but development sites on those areas are $2.5 to $3 million for 700 meters squared. So I don't know, they're cheap or expensive, but they all seem to be expensive to me.
And if you're investing for cash flow, is a little bit different to perhaps having a focus on trying to maximize the capital gain, which is maybe what the question was alluding to.
Yes.
Some investors like to try and find the ideal place to purchase to get the best capital gain that they probably possibly can.
Yeah. Well, it all depends on your cash flow, isn't it? Yeah.
With the current government's rules promoting buying new properties with lower deposit and KiwiSaver access, which is more affordable for a first-time buyer with low capital, is it worthwhile going this route or looking at alternative sources for investment properties?
Well, to be honest, if you are buying a deal, right? So if you're buying a property, brand new house, you get to use your KiwiSaver and all of that. As long as you're getting a deal, that you're getting some equity in there, why wouldn't you buy it? That's what we say. But don't pay over the market price. You cut a deal, grab some equity, and we suggest, if you can do that, then why wouldn't you buy it? That's simple as that. Same as a second-hand property. You don't rush and pay the top dollar. You try and negotiate and, try to pick it up for a good price.
Mm.
So it's all about negotiating and what your equity level is by you negotiating. Like you look at an $800,000 property, if you can negotiate 75 grand, that's 75 grand equity in your hand. You can refinance and use it to do something else.
I think if you're starting out and you don't have much capital, the key is to try and build that capital as quickly as possible by improving the property, either doing what you suggest, Celeste, is getting a
Discount.
managing to buy it cheaper than what it's really worth. But if you can combine that with being able to improve the property, then you can create some additional equity.
Yeah, fantastic. I agree.
Did you use non-bank lenders to purchase some of your investment properties?
I've only used non-bank lenders to trade, which they've been really good to deal with. Very good. And I think Then has been dealing with some of the non-bankers as well. But I've bought 2 properties with the name just went out of my head. We got Resimac. What's the other one, Maggie?
BaseCorp?
No, we've got Resimac. Good banks to use. Resimac is good. And there's another one as well. Bluestone? Select. And I've used Select because they gave me 5% for 5 years. And I jumped on it. I thought, I'm not going to let that opportunity go away. And the only condition was you got P&I, which I was happy with. I'm like, yes, where do I sign? So yeah, if a non-bank, so when we refer to non-bank, so, there's banks out there that do 30-year mortgage term loans, so we can use them as well, So there's stuff like that. So the answer is yes. If you can get a good deal from not a main tier lender, a second tier lender like Resimac, which have main tier lender lending criteria, why wouldn't you use them? Yeah.
It doesn't matter so much who you're using, but what the terms are and what the interest rates are.
Yeah. But if you're using like BaseCorp, you want to use them to trade. Yeah.
Which company would you trust for development?
You'll have to do your own research on that, but there's some really good companies out there. They're not cheap. None of them are cheap. I've only, there's Ashcroft Homes, you got GJ Gardner, you got BCG Group. They're quite good, but you have to do your own homework on that. We, with our developments, we run our own developments, so we get our own subcontractors and we manage our own guys. And it's not easy. It's pretty hard work to manage the guys, but yeah, you kind of have to do your research. But I've never had anything bad about Ashcroft Homes, GJ Gardner, and BCG Group.
But there's a large, also when we run a development, there's a large number of companies involved. So there could be a question that's asking, I'm not sure, about a builder, or they could be asking about planners or engineers. So there'd be a lot of different types of companies involved in a development, unless you're looking for sort of a one stop shop provider that does everything for you.
Yeah.
So if you wanted to clarify, we might be able to answer in more detail, but done our best. Next question. I am just settling my first property for $368,000, which is a freehold commercial unit in Wellington. It's a new construction. I'm paying 100% cash from my savings. This will be rented on a 3-year lease and should be cash flow positive. How can I leverage on this property to move to my next property investment?
So you bought a property for $368,000. It's a freehold commercial unit. So it's a new construction. I'm paying 100% cash from
I'm paying cash for it. So you'd be able to take that to a broker or a lender and
refinance,
borrow against it based on the rental income.
Because it's a new construction as well. So it's a new commercial building. You'll have 100% IEP, earthquake rating. Now, I know some of the banks, they're very careful how they lend money to people in Wellington. So, you might be able to get 200 grand back or something like that. or you can just ask for an overdraft facility. So, we mentioned Chris Pedersen Mortgages, KPM. Suggest you talk to him. He's very helpful with this kind of stuff. He'll give you a hand. And the good thing about using Chris Pedersen Mortgages is he's mates with the bankers.
Mm.
And so you need a mortgage broker like that who knows all the bankers.
How do we research regions and not familiar with, or do you partner with a real estate agent?
Do you want to answer that, Mickey? Or do you
Well,
want me to-
if I personally, if I was looking to buy somewhere I wasn't familiar with, I'd go spend some time there and then connect with the local property investors association if there was one.
Yeah.
Um,
Well, I'll tell you how I do it, because obviously I have to answer a lot of questions for clients during the day. So I'll have a client like someone like Finn, who'd email me and say, "Hey, Slash, I'm looking at buying this property in Tokarua. This is what I'm paying for, 400 grand. What do you think?" First thing I do is I jump on Property Guru.
Mhm.
And I look at the area, I look at what the neighboring properties have been selling for, I look at within 1 or 2 kilometers of radius. This takes me 3 minutes to do. This is the beauty of using property coaches, because they teach you stuff like this, right? And then I work out, okay, I can see people are paying 450, 500 grand for houses. Yes, you're paying the fair market value. No, I can see people are paying 250 for houses in that area. So why are you paying 400? That's one of the questions. So the reason they could be paying 400 is because there's 2 dwellings or 3 dwellings, and then what you do is you get a couple of real estate agents to give you a rental appraisal. So not one, because you're not familiar. You want to look at it. So they might come back and say 300, one might come back at 190. So you go, what's happening here? So this is some of the things you do. Whatever you do not partner with a real estate agent.
No, they'll probably sell you what been sitting on their books for a long time that they can't sell to anybody else.
Yeah, exactly.
And you would do your own market comparisons of value as well, which we teach you how to do in property school, so that you're not at the mercy of an agent massaging the results to present what they want you to see.
Another thing to look at is auctions. Nowadays auctions are all online. You could register and just watch it, so that you could follow the market, because it's the open market and things are selling and what people are putting their hands up. So that's another way of getting your research done, following the market, so you're on top of it.
Yep, absolutely.
And as you get to know an area, you have a look at the adverts that are online carefully. Look at all the photos and things, and the aerial imagery that's usually available through the council websites. And then you can, even if the property isn't selling at auction, so you don't know immediately what it sold for, you'll soon see which properties hang around, how quickly they sell, what sells quickly, and you can follow up afterwards to find out from the agents what things sold for if it wasn't an auction.
Exactly.
So that would let you get to know which suburbs move quickly, which ones no one wants to buy in, for example.
And sorry if I may add, Maggie, in property school, we do a section on market research.
Yes, run by Than.
That's why I said little.
Yeah. Actually, if I'm looking at buying property somewhere, I ring up and Than and say, what's this worth?
I think over my lifetime, I've bought probably 50 properties without looking at it.
Mm-hmm.
and
I've again done it the way I've described it. And Than knows that too, I think. That's how
we're on the phone, we're like looking at, hey, you're in front of a property guru. Can you look at this up? And do you think, it's fun.
It's fun. So I'm quite experienced using the softwares to buy properties,
Mm-hmm.
and all of that.
Can we have a chat with you regarding the contract with social housing providers, as we are interested in this for interest deductibility? This webinar has some great information. Thank you. Well, there isn't one specific contract. Each social housing providers would have their own agreements, but you should be able to negotiate. And of course, if you don't like what's in the agreement, then you simply
don't work with them. So the easiest way to find a social housing provider is to do a Google search in that area, and you'll find a list of providers, isn't it, Maggie? And you can just jump on it.
And there's also a government register of all the registered social housing providers that you need to use if you want your interest deductibility. You can find it, I think, at CHRA. If you Google CHRA register, that should come up with the link to them. And then you can just search in whichever location you're interested in.
Yeah.
If you have a big development like what you are showing, how would you pay the development costs until you have the place to be able to rent and get cash flow then?
Well, basically, if you are doing a big development, or I wouldn't say the 4 is a big development, I'd say it's quite a small development when compared to what developers do in Auckland. But anyway, so we'll just stick to the 4. What happens here is you have to put your money in. So you put 50% deposit in, the banks put the other 50% of money in. So the banks are 50%, so 50% finance, 50% is your new cash. You basically pay the interest cost. You have to pay the interest cost because you're dealing with the main tier lender. They charge you interest every month, right? And then what happens is at the end of the project, once it's finished, you can either refinance and get a good interest rate or refinance to another bank. That's how you do it. Now, it is tight when you're developing because you have to put your money in, so you have to budget this in your spreadsheet if you are going to do this. Again, so, if you do 4-8 lot development, people normally, if you're using a second tier lender, you can capitalize your interest costs and they charge you interest on it as well, because what it means is they keep lending you money, which is interest money.
You don't have to make any payments during construction, but you'd have to factor that additional cost into your numbers to make sure it still stacks up.
Yeah, it could be 100 or 200 grand by the time you finished, but again, that's the cost of having to capitalize your interest cost.
For our first owner occupied property, should we put it in under a company or trust or some other structure?
Now that's quite a complicated question, because when you look at it, you go, okay, well, have I used KiwiSaver? Yes, which means you cannot use a trust structure for 6 months. So you've got to own it in your own names. Sometimes the banks want you to own it in your name. So the question is, for you to put it in a trust, you won't be putting in a company. It'll be going into a trust because it's a family home, right? You want to put it into a trust. You need permission from the banks to move it into the trust. Now, again, if you've used KiwiSaver, you've got to wait 6 months before you can change the structure. KiwiSaver requires you to own the property in your name.
And Taylor says, in this high interest rate era, which region do you recommend for high gross yield properties?
Again, just coming back to cash flow positive investing. So it depends on your income as well. Like if you're earning 150, 200 grand a year, you can probably take some negative hits. You don't mind that. But if you are looking at cash flow positive, you've got to go in the regions. All the regions are doing well at the moment. They're all doing well because there's a shortage of housing. It's just you've got to run your numbers. You've got to see what you're buying, big land, houses. So if you are buying big land, sometimes they're negative because you're paying for the land upfront. So you just got to do your numbers on the day and your interest rate with the banks and all of that. Sometimes cash flow positive comes from your second lot of income or third lot of income, which is second or third dwelling. So the more dwelling, the better in terms of cash flow. Yeah.
And I'd just add to that to be careful about just looking at gross yields, because that can be deceptive. You need to know what the costs are for a property. So you need to be considering your net yield. I just completed my minor dwelling, but probably overpaid the build. What are the creative ways to build my next property? I'm also a bit apprehensive on renovation to increase value. Any advice?
So what creative ways to buy your next property? I mean, to be honest, when you say you've overpaid for your minor dwellings, including all the services, cost between 250 to 400 grand. So I don't know if that's the kind of number you're talking about there. It would be nice to know your numbers. What are the creative ways to buy your next properties? Again, I like the idea of adding minor dwelling. I think there's a massive demand for 2 and 1 bedroom houses. So I like that idea. It's just a matter of buying the property at the right price. So buying a house with a piece of land, not overpaying for it, negotiating hard. and that's what I probably would recommend.
Mm.
Just going out and
And
looking. Mm.
shopping around for that minor dwelling or that additional
Mm.
dwelling as well, so that you're trying to avoid overpaying for that. And there can be various different ways of
Yeah.
adding a minor dwelling.
And sometimes you just, for renovation, you might just need to paint and put new curtains in, and the house revalues.
Exactly. The renovations don't need to be big and expensive.
No.
Sometimes, in fact, Than, I remember you used to talk about an example where all you did was gave the house a really good clean, didn't you? There was one. Was it Papatoe?
Yeah.
Mm.
Yeah, we made about 250, 200 grand, something like that on there then, or 150, I can't remember. But yeah, we just give it a good clean, and I think we fixed one of the taps and
All the lawn twice.
Yeah, mowed the lawn twice, that was it.
Mm.
Took our margin rate. So that's what you have to do with the banks, sometimes, Remember what you as an investor need to realize is if you say you buy a property for 700 grand, you revalue it at 1 million, it doesn't matter if you can't sell it in the market. It's not about that. It's about the equity stacking up for banking purposes.
Mm.
That's how you as an investor need to always think.
But talk to Chris Peterson Mortgages as well. They might be able to look at the current properties and income, and advise if there's anything that you can do there to move on to the next property sooner.
Yeah, correct.
Would you still focus on paying off your own home loan first?
Always, you focus on paying off. So try and put more towards it, because if you pay off your loan, you can refinance and use your equity to buy something else. So it's a good discipline if you can focus on paying off your loan.
If National comes and we have interest deduction on existing property, will new houses demand? I think she means will demand for new housing come down?
I don't think they will, because the cost of building new houses is not cheap. You've got to buy land and build, and anyone that's building houses understands the cost of it. So I don't think that's the answer. I think there'll always be demand for new houses because people want new things. It's just and we got more people coming into the country. Something like this, 400 families a day moving into the country. So you can just imagine the pressure it's going to put on housing, And if you look at the government's refugees, they're taking 1,500 refugees a year, so which is about 3 families per day. There's 3 houses a day you need there. Then we go, if you're saying there's 400 families coming in across on average a day in the country, then massive demand on housing.
I imagine there will be investor interest in existing stock will certainly pick up significantly.
Oh, that would go through the roof really quick. Especially anything with 400 or 500 meters square of land, you can get rid of it and put 2-3 units on it. I think those are the stock that most investors will be chasing. 600 meters square land, you can, that 4 houses that we were showing you that we're building, that's on 600 meters square of land. So, it's not like it's on 1,000 meters square of land. Yeah.
It's just the angle that I take.
Who are some property finders?
So if you contact Amy, and then what we can do is organize some of the property finders and see where do you want to go, and we can discuss the charges and tell you what they are.
So I mentioned to one of the attendees about entering into a commercial lease type of agreement with a social housing provider. How do you find the best contact to connect with in those departments? So again, look on, depending on what area, what location you're wanting to find a provider, I would jump on that CHRA, I think it is, register that you can find by looking on Google, and there'll be contact details there. So some of the organisations are quite sort of grassroots, not necessarily very huge.
One of the biggest questions is a lot of families say to me, we can't get funding. Well, either if you can't get funding, get a second job or do joint ventures with your business partners. And a lot of people say to me, and it was funny, I was in a meeting today and said, someone goes to me, Celeste, did you have a second job when you went into property investing? And I said, yes, I did. I worked at GRA as accountant during the day. At night, I bought a property and I was painting,
Mm.
and I would just spend 8 hours a day renovating my property at night, and then I go to bed at 5:30 in the morning or 5 o'clock, wake up at 7:30 and come back to work till the property was ready to be rented. And that's what I did, and that was my second job. So sometimes you kind of have to do those struggles to get your portfolio with a foundation. Once the portfolio has a foundation, geez, you're sorted. You're sort of like, now I've built a foundation with my portfolio. I don't need to worry about saving money. I never think about saving in my life, because that's not my priority now. My priority is just focusing on my portfolio and paying it off. So that's what happens. And same thing with Maggie and Then. You've done the hard yard, build a portfolio foundation. You don't need to worry about saving $20,000, $30,000 a year. Now you can just live your life because your assets are naturally growing. Yes, some years it's going to be down, but on average, over 10 years, it's got a 7 or 8% growth on it.
I second that
Yeah,
too. I mean,
as
I
long
work
as
on
you
the
got that.
properties too. Sorry, after you, Maggie.
No, I was just gonna say, you just have that long-term focus
Mm.
that you've
Yeah.
been talking about, Celeste, that 10-year plus time frame.
Yeah.
Sorry, go ahead then.
Oh no, I was just saying that I second that. I myself was, down on my knees and hands dirty, doing the work on the rental properties and even trades when it's
Mhm.
started off. Even now, I go and I do enjoy the aspect of working. So the other day I was giving the electrician a hand.
Thank you, guys. Have a good night. And remember, property investing is all about having fun. We are just normal humans. We're not some sort of super genius. We're not Elon Musk or anyone like that. We're just normal mum and dad investors, and we want to do for our family. That's all it's about, and it's all calculated risk, guys. And remember, mark this day. And if you don't invest in properties, look at it 10 years later and go, shit, why didn't I do it 10 years ago? Talk to anyone who's into properties. They'll tell you, I wish 10 years ago I bought more properties. Including Maggie and Then. They'll tell
Okay.
you.
Well, it's been fun. Good night.
Yeah. Good night, guys.
Thank you,
Take
guys.
care. Bye.
Yeah.